this is something that we work hard for throughout the life when we work as employees. This is the money we save. Certainly, a lot of viewers very angry. We've been getting angry calls saying, yes, middle class is being overtaxed and there's no relief for us. So this is the shocker. Now, also, to make a point, Budget 2006 has introduced tax on EPF withdrawals. Now, 60% of employee contribution will be taxed on withdrawal. Also, to all the people tuning in right now, also important to note that this is only applicable from April 1st, 2016, which means whatever you have saved before April 2016, it will not be taxed. Now, not applicable on accumulated contribution, which you've already done. So that's a clarification. Also, now, whether, the contribution from the employer will be taxed or not, that's one of the questions. We need clarification for that. And I've got our tax expert here from Deloitte, Divya Baweja, joining us. Divya, why do you think government has taken this decision?
See, actually, if you ask me, this decision comes as a big shocker for everyone, including me. There was always a demand that the national pension scheme, which was given a lot of boost last year, should be made EEE to bring it in line with the PF regulation, which was under EEE regime. So what they have done is that when we went through the finance minister's speech also, he was looking at bringing about a parity in various pension schemes, be it superannuation, be it provident fund, or be it national pension scheme. So I think this has all been in terms of bringing parity. So because they have talked about a national pension scheme, 40% of contributions being exempt and balance being taxable, so to bring about parity, they have said that 40% of employees' contribution being made exempt and balance taxable. The only thing is that they have not touched the past contribution, which is a positive sign. This is also not a great positive sign because you saw from callers there were a lot of anxiety amongst them. So definitely by doing this, he has made this EET also and NPS also EET to an extent.
Right. So exempt, taxed. So this to distribute the savings that you do equally, if so, to EPF, to the national pension schemes as well, to bring some equity. So that is an attempt. Also, no clarification as far as this 40% tax exemption is concerned. Now, 40% tax exemption on your contribution is there, yes. But is this on contribution made by me as an employee? What happens to the contribution which is made by the employer? Now, the trouble is, if you tax the contribution made by an employer, then you run into something which is called double taxation.
Right. So when I look at the contribution made by the employer, there is some kind of a disconnect there also. So if I look at the memorandum or look at the notes, it talks about that any contribution by the employer over 1,50,000 will be taxable. But when I look at the provision, there is some disconnect in that. But you're right, to make it simple, there could be a double taxation. And in terms of this 40% contribution by the employee or 40% of total contribution, there is some disconnect between what is there in the memorandum or the rationale which was given and what is there in the provision which has come out.
Because this is the saving I make after paying tax. After paying tax, there is a certain contribution. There is an exemption under ATC, which I've availed of. Then again, I'm taxed. So that is double taxation that we are talking about.
Right. So when I take certain exemption away from ATC, and I don't know, I'll have to see how they are trying to balance the both. Otherwise, what will happen is that there will be some portion which will be exempt or some taxable. So to that extent, whatever is not exempt under ATC, I pay tax on that, and again it gets taxed here. So to that extent, there would be a double taxation on the over and above amount.
Okay, so we'll certainly be waiting for more clarification. This is a take by Neelab on Budget 2016.
So what exactly are some of the critical takes?